All right, this is video number 5 in our checklist series of checklist items that we look for before investing in a stock. And this one we're going to cover management and how to identify good versus bad management. And the first thing I'll just say to basically investors at all levels, you're going to want to go to two different resources to find what management is saying, how they're articulating the company's strategy. So the first source is the conference calls that companies do with every quarterly result announcement that they do every 3 months. And for me, what I do is I go to seekingalpha.com and I read the conference call transcripts. It's faster than actually listen to the conference call itself, which usually companies will run it live with a free dial-in number, or they'll run a recording of it on their website for some number of days after the results. But I like to go to Seeking Alpha and just get the conference call transcript and then read it. It's faster for me. But you pick whatever you wish. But either of these methods, you get to hear a consistent and timely articulation of the company's plans, of their strategies, and they get a chance to either help shareholders understand better what's going on or not, right? And then you also get to hear the analyst questions to the company, and some of these questions can be very, very illustrative. Both the questions can be very good, they can unlock a lot of commentary from management, or you can watch management kind of dodge questions or not really answer them in a genuine way. And that tells you a lot, actually, how they handle especially the difficult questions from the analyst community. Okay, so conference calls. The second thing is the CEO letter to shareholders, which every company has to file an annual report every year, and most companies, if they're smart, they do a CEO letter to shareholders in that annual report, and that letter is a mechanism to articulate in writing the strategy to shareholders, to sort of articulate why this company is a good company and to be sincere about the missteps that the company made in the past. And you can really learn a lot from reading these, both about the company itself, but also about the character and sincerity of management. Some of these CEO letters, they're full of BS. They say all the right phrases, but it's not sincere. Other CEO letters are very genuine and very open about things that were done wrong and things that they want to try and do better in the future. And the best CEO letters do that, plus they inform shareholders and inform people who read the letter. You walk away from the CEO letter smarter about the company and smarter about the industry. So there's sort of multiple levels of value in reading these letters. So these are the two sources to go to. Okay, and then a couple other thoughts to think about. Sometimes companies currently have bad or mediocre management. But remember, managements can be replaced, right? And Wells Fargo gives us a good historical example of a company that remember, Wells Fargo had the account opening scandal, and this has been kind of hanging over the company for a while now. And recently, there is a replacement of management, and it looks like finally this company has gotten some good management in place that's going to allow the company to move forward and kind of get past this sort of stain on the company's history. And so if you have a sense that maybe management that is a poor management is going to be replaced, that can be a catalyst to invest in a stock, for example. Now, on the other side of it, what if you have a company that already has great management? And of course, no CEO lasts forever. Management teams automatically get replaced. And so you kind of want to look at the company's succession plan. And here's an example like with JP Morgan, a world-class CEO in Jamie Dimon, but he's not going to be running the company for forever. And if you had to bet the next CEO, would that next CEO be better than Jamie Dimon? I would take the under on that. So if you already have great management, that's something that may not be sustainable going forward. So you want to think about that as well. And then one other thing to think about, which is what is the nature of the promotional vibe that management gives? Some managements, they're really promotional. They're too promotional. And it gives you kind of a feeling that they're there to say certain catchphrases, say certain words, but there's no substance behind it. Other managements may not be that polished, but they actually are genuine and sincere in what they're saying, and you can measure that by seeing what they've said in the past and whether they've actually done those things. So sometimes management, your measurement of management is something that happens across time. and you see what management has said, and you see whether what they actually did later matches up with what they say. So you want to cross-check what management says, whether they do it, or whether management is more full of BS and is extra promotional. The managers that are very, very promotional, very, very persuasive, you want to sort of tune your radar to kind of catch that and be sure to measure whether what they're saying is actually matching up with what they're doing. Just because a management says words about shareholder wealth or doing the right thing by shareholders or doing business ethically, those are just words, right? You want to match it up with actions, and you can do that over time. Okay, so these are the thoughts on management. There's probably more to go here. I'll probably do some other videos on management going forward as I see other events worth commenting on, but I hope these videos are helpful, and thanks as always for watching.